Fed just voted to keep interest rates the same, and they voted nearly unanimously. But I have to say nearly because there was actually one dissenting vote, and it came from Stephan Miran, who is the latest person appointed to the Fed by President Trump. Now, Stephen Miran has been the outlier in most Fed votes, calling for more interest rate cuts, whereas most of the Fed is really worried about both inflation and unemployment at the same time. But recently, inflation is becoming very worrisome. The most recent inflation data was not good. It was headed in the wrong direction. And with the war in Iran and also tariffs still being a problem, inflation could accelerate. So that's why the Fed decided to keep interest rates high and decided not to cut, even though unemployment is also a problem. It's higher than it was last year. So if you ask me, even though I'm the chief economist of Redfin and I believe that the housing market could definitely use lower interest rates, home sales are near record lows right now, we need to keep interest rates high. Because if we were to cut interest rates now, it would lead to worse inflation. And that would mean that we would have to raise interest rates even more in the future. And that could send us into a recession. So it's really just not an option, I think, to cut interest rates at this moment. There's too much going on that could really turn into a problem for inflation.